Hello, my name is Shiloh. I'm the principal consultant and founder of AdderWorks. Today, I am going to walk you through two different budgets that nonprofits use for grant applications and are just good tools for you to have organizationally. The first is an organizational budget, and this is essentially money that comes in and goes out for your day-to-day operations. The second is a project budget, and that would be specific to one particular component, project, program that you have operating in your nonprofit, including capital construction. So let's dig in. The first, so you'll have a link to this budget template in your workbook. You can take a look, and everything that's in yellow is usually stuff that you need to fill out. So you can fill out your name, and what we have here are different columns, which represents different years of your nonprofit's operations. It is always a good idea to fill in historical data, ideally going to back to maybe 3 years if you have it. And then you can also add in your current year budget. Theoretically, this is a budget that your board has approved, and your current year actuals, which should be kept up in your accounting software. Ideally, you're using QuickBooks or Wave or maybe even an Excel spreadsheet. It's totally fine. So this tool will just give you a snapshot of how your organization is doing financially, running its core programs or its operations. Our template here has various line items, which are very typical for nonprofits. You can change these if you need to. Some of them will not apply for you. Most of our clients are in the visual and performing arts, so they have some type of admission program, a ticket sale, or sometimes we have some education clients who are charging if someone attends a workshop. But these are essentially items that you can customize depending on the activity of your nonprofit. So there are two main types of income: earned income and contributed income. Earned is anything that people are paying to participate in your events or money that you're gathering on site or at a program. Contributed is mostly just all fundraising activities and other philanthropy items. Sometimes budgets have the grants broken down into type. You can combine them. It's kind of up to you. There's foundation grants. The bulk of your grants will probably be coming from here. Corporate sponsorships or corporate grants like a bank or an energy company, government grants, and individual donations. So if you run an end of the year membership campaign or annual giving, you typically would put them in here. And then the other categories, most CPAs and foundations looking at your financials will want your fundraising events pulled out. So in this particular template, we have events and fundraising pulled out into the other income, which is kind of the third catch-all income. If you have an endowment or are drawing from reserves or getting interest in investments, that goes here. And there's also a miscellaneous fund just in case you need it. But again, you should adapt these categories to make sense for your nonprofit. And as an aside, these categories are echo mostly what's on on a 990 template. So one reason why this works so well is that you can either look at your QuickBooks or your 990 and pull these things through because they should be pretty similar. So then once you have that, plug away at your historical data. Ideally, you'd have 2 years so you can track patterns in spending. Your current year budget, if you have not had your board approve an annual budget for you, I highly encourage you to do this. And then your current year actuals, which is the amount of money coming in and coming out. This line here, number 3, this is going to help you further with your financial planning. So you can add in the actual fiscal year that you're tracking. And then here, let's say, so it's currently March. So we would put March here, and it's 2025. And March is 8% of the year completed. If we go to April, there's a formula that, you know what? Formula isn't working, but we can fix it. So we are in March, which is a third month. So you'll just delete that, put the number 3 here. The formula, I'm pointing right here. The formula is right there. So March is 25% through the year. So let's say you have budgeted $1,000 in ticket sales, and so far you have brought in 200. Well, let's see, you have brought 125 in. This is going to tell you that the money that you have brought in so far, and compare that to your budget. So even though March is 25% through the calendar year or your fiscal year, you'll have to kind of do the math if your fiscal year is not equivalent to a calendar year. This is showing that you have raised only 12.5% of this budget line item, and yet the calendar year, your fiscal year, it's 25% through. So by looking at this, this would tell me, oh, we need to make sure we're selling more tickets for the last 3/4 of the year, or maybe this is okay because you had a small event in February and your big event is October. As long as you can justify this, that's great. But this tool is just to help you know how on track you are with the money coming in. So I would say that doing this exercise is incredibly important. I have had a lot of nonprofits come to us and they can tell us their expenses, which we will go over in a second, but they haven't really thought about their income. So a typical nonprofit budget, you're trying to balance the budget. And what that means is that your revenue equals your expense. And if there's a variance, that's totally fine. Some years you're going to be in the hole. Some years you might have a little bit of a reserve. Typically about 10% of your annual budget is appropriate to have either a deficit or money left over. And you can use that money left over, just keep it in your bank account. The next year might be a little bit different. But I want to make sure that you're prepared to really think about the money coming in an average year and flushing these out, because this will kind of show you, once you fill in the income and expenses, where your gaps are and maybe what you need to focus on in terms of fundraising. So, you might say, we were expecting to get 30,000 in foundation grants, but now to balance the budget, maybe let's go for 50. And then you can bolster your budget, you can change it, you can have the board approve it again if you're making those tweaks. But I would say looking at this quarterly, if not once a year in the middle of the fiscal year, to kind of do some projections to close out the fiscal year is really helpful, and have your board be a part of that process. All right, now on to expenses. Just like with the income, there are various categories with expenses. So the first is typically personnel. So we have payroll taxes, health benefits, other benefits like disability insurance. Even if you are getting paid as a 1099 contractor, I would still put that income or that expense for whatever you're paying yourself, whatever you're paying your employees and other contractors who are related to the programming of your nonprofit in this payroll line. If you hire a grant writer, for instance, or have a bookkeeper, keep those things in professional fees. Professional fees are typically most 1099 employees, unless, let's say, you're hiring a teacher to run a program. I would say that's like real operation program expenses and needs to go here in payroll. So it's fine to put some 1099 employees in payroll. It's fine to keep some in professional fees, but just kind of really think about what their roles are. Sorry, I accidentally turned the light off. So think about their roles are before you plug them in. If you are only working as W-2s or only paying people as W-2s, you may not have payroll taxes. You may not be offering benefits. And that's okay just starting out. But this budget is actually a really great tool for you to do some financial modeling for the future. So let's say, hey, next year, I want the executive director to be part-time. So in your budget for next year, which we have here in column G, you could start plugging that anticipated budget in. And by going through the exercise of looking at your income and expenses, you'll realize what you need to do to bring in more money so you can pay for the staff that you want and the staff that you need to run that program. Again, these expenses are mostly pulled from the 990 template. This is a standard nonprofit budget. We have payroll, and then we kind of have other expenses. These are very typical. You can change them if you needed. Professional fees, we've talked about. Program supplies, hospitality, if you, give your employees a gift card for their birthday, or let's say you need to take a board member out to lunch and the organization ends up paying for it. So anything related to that, that's here. Travel, including mileage or getting to a conference, Ubers, office supplies, and sometimes you'll need to make a determination, is something that I buy for the office, for my admin, or to operate in a program. Utilities, if you have a building, marketing and promotions, you might need to put your MailChimp or your, various other subscription-based marketing tools are okay to live here. Your insurance, examples of that are liability. This should really say directors, D&O, which means directors and officers. Typically, nonprofits have those two different policies, a liability, which covers you in your program operations, and D&O, which would cover your executive director and your board. D&O means directors and officers. It's just a standard nonprofit policy that would cover anything that may happen at the management level of your nonprofit. Accounting and legal, you may want to pull that out separate from professional fees. That's fine if you want to do that. Repairs and maintenance, again, if you have a building. Printing, put the copier lease in here. Postage, this is mail for fundraising or sending out, brochures about programs going on. Your rent or mortgage interest if you own a building. Dues and subscriptions. So let's say you have, you're doing some education advocacy work and you have a subscription to Chalkbeat or anything else that is subscription based where you're just getting kind of information from. Or you can also put like a membership to the local museum association in here as well. Training and education, if you go to any conferences or workshops, the fees go in here. Internet, website software. This is just basic software. You might want to put your QuickBooks Online subscription here. If it is more program related, I might consider putting a subscription in dues and subscription, just kind of depending on what it is. It's a little bit subjective, and hopefully your bookkeeper or CPA can guide you. Internet hosting fees, email hosting fees, that goes in here. Your Zoom subscription. Depreciation, this is a little bit tricky, and I actually like to leave this below the line, but you're not going to have this unless you are a nonprofit that has established itself and have been doing 990s for a while. This means that you own physical property, even something like computers or a building, or let's say furniture. Over time, the value of that is going to decrease, and depreciation is read as an actual expense in nonprofit accounting. I'm going to leave it in here in case you need it, but for most people, I would just say, let's delete this row 46. Unless you work with an accountant who's like telling you exactly how much your depreciation is. And there's a miscellaneous line item here. Sometimes stuff comes up and they can't be categorized. So after you fill this out, it's going to total your expenses. The formula's in here. It's going to, moving up, it's going to calculate your income. We have all the formulas in here for you. You can take a look. It will calculate your net surplus. Either you're in the red or you're in the black, and that means in the red, you have lost money. In the black, you have an excess of money. And you can also always balance a budget if you want to take money from your reserves or savings account. And this is your organizational bank, not a founder's personal bank account. But if you want to take that money to balance the budget, that's totally fine. You can add that as kind of like an account into this. So like I said, at the end of this exercise, you want to be either at 0 or 10% in the red or 10% in the black of your operating budget. So let's say you have an operating budget of 100,000 and you should either be losing no more than 10,000 or gaining no more than 10,000. And it's just kind of great exercise and rule of thumb to do that financial planning. So again, this tool is for organizational budgets. It's a great way to show the difference in how your expenses have changed over time and how your income has changed over time. It can be used as a planning tool to figure out which fundraising initiatives are needed to balance your budget. It can be, you can have 2 different budget scenarios in here. If you really want to hire that staff member, you can create another column and kind of figure out exactly how much more money you would have to bring in certain ways to justify that staff hiring. You can add another column here. We have a reporting tool that's built in that's going to tell you how far you are above or you need to go to make sure that each particular line item stays within the budgetary goal that the board has approved. And then we have some financial modeling and outlook looking at your next fiscal year. So that's the organizational budget. We're going to move to project budget now. This one's a little bit more simple. Same, fill out your name, project name. I would say, 95% of grants are going to ask for a project budget. 50% maybe ask for an organizational budget in addition to that. So these are things you should have prepared in advance. So you're not, looking like a deer in headlights when you get that request. You can kind of have it already ready to go. And it's actually a really great exercise to go ahead and do a few different project budgets so you actually know how financially successful the program is, and maybe you need a certain grant to help support that particular program because you have a hole once you add in all the expenses. Is a great way to show you what staff may need to be hired to cover certain program activities. So again, these are not just things that you need, attachments you need for grant applications. These can be tools to help your board understand the finances, understand how much money it takes to actually run a program, where you need to focus your attention on fundraising. These are just really good foundational tools that you should have. All right. Within the project budget, same type of thing. If you are applying for, let's say, we're going to the Skillman Foundation, we're asking then for $20,000. And we have already gotten $10,000 from the XYZ Foundation that we're going to use as match. I think it's at $5,000. And then the board has said this is a critical program that we run, and we're going to use some of our operating funds to offset the cost of this. Right now, let's just enter $5K for that. I need to work on some formulas. Doesn't look like these were preserved. Okay, so right now we have $30,000 in income to run this fictional program. This is the project budget that we're sending to the Skillman Foundation. We're asking for $20,000, and which you would put in column B. And column C is how much money from other sources are committed or projected. And sometimes organizations or grant makers will ask you to actually identify if you have these money in hand or if you're applying for another grant and it's just kind of projected. So be prepared to really understand all of the money and how it moves within your organization and the grant cycles of when you're going to have money in hand. All right. So this would be like, let's say this fictional program is to run a summer theater series, and I know I'm going to bring 8,000 in ticket sales. So here we have, for this particular program to run it, we're asking Skillman for 20,000. We already have a grant for 5,000 from this foundation. The organization is committing 5,000 of its general operating money, and we know that through ticket sales we're going to sell 8,000. So right now we have a project budget of $38,000. We need our expenses to also equal $38,000. With project budgets, you do need for it to equal the income, equal the expenses. It's not like the organizational budget where there can be that 10% differential. With project budgets, it's exact. The income coming in needs to equal what's going out. All right, so let's start with expenses. So I know that the executive director is going to spend 10% of their time on here. So let's say that's $5,000. And I know we need to hire someone for the summer. Let's say it's going to be $12,000. We need, like, this is a fellow that's going to run the summer theater program. They're getting $4,000 a month for 3 months to help run this program. All right, so here I have a total of 17% or 17,000 to staff it. Sometimes you can also add in fringe. A good rule of thumb is 10% to cover payroll taxes, health insurance, or anything you have, self or state unemployment taxes. General rule is 10% is pretty okay. So I'm just going to put that 1,700 here because, and you can do this when you have W-2 employees. Don't put fringe if you have W-9 or 1099 employees, excuse me, because the organization is not covering that fringe or that insurance. All right, I need to pay a theater, or let's see, I need to pay someone to make costumes for my theater program, and they have agreed to do it for $7,500. And I know that I need to buy stuff to make props. Let's put $1,000 to buy props. Oh, marketing and promotions. We need to print flyers. Let's say 500. And we're mailing those flyers out. Let's do 75. It's a small mailing. Something else interesting about project budgets is that some funders are allowing you to do indirect costs. Typically, this is no more than 10 or 15% of your budget. So I typically put this in the last line. And when I have fleshed this out, I know that, let's see, I'm going to use 10% just because it's easy. So I can look at this and I can eyeball and I can know what 10% is. So it's 2,777. 2,777. And indirect costs is essentially just kind of a buffer pot of money that can go to you to help offset the operations of this program. All right, so let's look here real quick. We have a grant budget of $38,000 coming in. Oh, but our expenses are only 30. So in that case, let's say like organization is going to only commit 2,000 because I want, you want to lessen that as much as possible, how much the organization needs to draw from its operating budget. And, it's on our wish list to hire ushers this year. So when I'm doing this budget and I have a little leeway, you know what? I'm going to hire ushers to help seat people or do some wayfinding at the event. Let's see. Let's double this. Let's make the props like super great. Let's take out some online Facebook ads. So you can kind of tweak and like start to do some program development as you're working in this budget. And let's say, hey, let's give our executive director a raise. Just totally fictional. So now we're getting very close. I'm just going to lower this down to 1,000. And so it's a little bit more budget now. We're $2 over, which is great. I would probably just drop this down like this. So it's even 34 and 34. So now I have a project budget. I'm not quite done yet. Remember that I'm asking for Skillman for 20,000. I need to figure out where that $20,000 is going. So I actually put this in the wrong column. This is going to be the total project budget. And we need to figure out what's coming from the Skillman Foundation, which would be column B, and what's coming from other sources, which is column C. Skillman has no regulations on what their money can go to. It can go towards staff. So let's say I'm going to ask for $9,000. I'm going to ask for 50% of the personnel to be covered by the grant. I'm going to ask for all of the fringe. And I'm going to ask for $5,000 of the contractor fees. And then I'm just doing simple math to make sure that column B plus column C equals column D. Program supplies, let's split that 50-50. Marketing promotions, let's put it all to the grant. Postage, let's just put it all. We're getting close. Indirect costs, let's see, 2,775. Ooh, we're $300 over. So let's change this to a 4 and change this to 3. And then I'm just going to do a double check. That equals 34. We are good to go. So this is a really great tool for you to flesh out your project budget, to know how big your program can be because you understand the revenue coming in, how much money you need to ask for from a grant. And maybe in this scenario, you have a little bit of a buffer so you can build out the program a little bit more because you have a little bit more money left. Or let's say that Skillman comes back to you and they're only going to give you 15,000. Great, the grant was successful, but they didn't fund you at the full amount. So then you can go back and let's say, oh man, we can't hire those ushers anymore. We didn't get enough money. So you can do some scenario planning just like this based on how much money is actually coming in to fund your program. Again, I hope this was really helpful. I hope you understand the difference between an organizational budget and a project budget and how these tools can be used not only for fundraising, but to help you and your board understand your program limitations and where you need to devote your time into fundraising and resource development. Thanks.